Hello and welcome to this presentation on a couple more tabs of the Rental Feasibility Workbook for Federal Home Loan Bank of Topeka's Affordable Housing Program. This video will cover the development budget and the sources of funds worksheet tabs that you'll find in our workbook. So let's get started with the development budget worksheet. This is where you will enter all of the uses of funds that you have for your AHP project. These are the capitalized costs of the project. All budget items must be entered as a number, and adding text such as not applicable or to be determined will prevent the workbook from being uploaded into our online system. So do not do TBA or anything like that in the budget amount column. And some things to keep in mind, depending on the type of project, an amount must be entered into either the new construction or the rehabilitation costs line items in order for the workbook to be uploaded to the system. Be sure to identify any costs that are listed in the other line items as you fill them out. If you are grouping costs together, separate out the costs in the explanation box at the bottom of the worksheet. Only use the other line items if costs do not fit into an existing line item. So if you have something else that doesn't fall into one of these categories, you'll identify it here. Such as this. You'll put in amount, and then to help break it down and help us understand what it is, you can say an explanation down here. And that will help us understand what is included there and if they should have been identified in another line item. Part of the feasibility review of the development budget will focus on the reasonableness of the costs. To establish cost reasonableness for construction costs, the reviewers will be using the architecture drawings, bids, and explanations that are uploaded in AHP Online. If additional information is needed, clarification will be requested during the application review or during the review of the cost reasonableness if it's being done after the application and the project is awarded. So once you have finished the total development budget or the development budget worksheet and you've explained anything that you needed to explain, you'll carry on to the sources of funds worksheet, which is where we will identify the type and amount of every source of funds for the project. If there are any variances from what you list throughout the AHP application or the LIHTC application, low-income housing tax credit application, use the explanation box to explain those discrepancies. Otherwise, we'll be asking that through follow-up. The AHP subsidy must be listed as a source and must match the amount entered in AHP Online, or the workbook will not be able to upload into the system. If your project includes non-residential space and you need assistance in completing the non-residential sources, please contact us. Provide commitment letters or applications for all sources of funds. Source amounts, loan rates, and terms and fees should match the documentation provided. Construction and permanent loan fees must be listed, and the total fees should match what you put in the development budget. If you do not match the fees, so for example, if we look at this example, you'll get an error that says it does not match. And this is the permanent loan fee. So if you look back at the development budget, in the permanent financing section, you can see the loan fee is $20,000. And that clears that mistake or that error. And also loan fee for construction is over here. And in the development budget worksheet, it's right there, line 65. Okay. Now you'll see that this also has an error because we added $20,000 of additional costs. So the total costs need to match the total costs in the But okay, moving on. In the loan type column, you'll see here, if you have debt, you'll have different options for principal and interest payments, interest only, deferred loans, and cash flow payments. Principal and interest payments are the standard loans that are typical in permanent financing with financial institutions like banks or credit unions. Interest only loans are common with granting institutions like USDA or Home. Deferred loans are loans that have no payments that are required for a certain amount of time. And the last option is cash flow payments, which means the debt service is paid from cash flow and is not a required payment. Deferred developer fee is also a common example of this. Everything identified in the permanent sources of fund sources as a loan must have a loan type identified, and your response will change the calculation as we compare to the monthly debt service you enter. Don't forget to fill out the low income housing tax credit sales price and historic tax credit sales prices. We'll check that against what the equity investor letter says in the application. The construction financing you list should also be sufficient to cover the costs identified in the development budget incurred during construction. Use the exclamation box at the bottom here to provide any additional details that's needed. If you have any questions about how to fill out the sources of funds or what documentation is needed to verify, please don't hesitate to reach out to staff in the HCD department. That wraps up this video. Please watch the rest of the series for the other sections of the workbook. And again, reach out to HCD department with any questions. And thank you for watching.